Okay, today, eighth session, May 14. So we are discussing the computation of corporate tax. So we just discussed 16. Now we are discussing 16.1. What is the 16.1? Because earlier we covered the distribution of profit. So now again, if we come to the next slide, so what we gonna cover on that? Entertainment. This is our next point, entertainment, but on the same sequence, on the same point. So entertainment expense, how it will be treated in the corporate tax? What are the treatment for the in the corporate tax? How we gonna file the return? This is also interesting topic. So this is also the interesting topic. Just now we covered this. So now our next is the point number 4, the entertainment expenses as per Article 32 of the City Law. So now the meals, transportation, air tickets, admission of gyms. So entertainment expense as the employee. Article 32 of the City Law is saying if it is a business expense, okay, even if we give the entertainment to the customers, owners, partners, suppliers, these are normally called the stakeholders, business stakeholders. Business stakeholders. If this is the business stakeholders, those UAE Corporate Tax Law is saying 50% is allowed. What does it mean? Add back 50% of the expense. So let's take one example. If we arrange the meeting, we arrange one event, okay, where we invite our customers, and we offer the some meals to them. So let's say we have paid the 100,000. So if we paid the 100,000 as expense, entertainment expense, so the law is saying 50% is allowed. So which means 50% is a disallowed. So what we did in accounting profit, in accounting profit, 100, let's take the example. Accounting profit, how much we have? We have 1 million dirham, we have accounting profit, and minus 100,000. What is that? Entertainment. To customers. Of course, when the customer is there, the owner is there also, right? So the accounting profit is 900,000. Our accounting profit will become 900,000. In accounting, of course, when accountant paid this bill to the suppliers, he must record in the accounting system because he have to match his bank. He have to prove that, okay, where the funds are utilized. But the law is saying, for the city law is saying, corporate tax law is saying, he is not accepting that. He's saying it may be your accounting expense, but for city expense, the 50% of this is disallowed. So which means 50% is the 50,000. So we have to add back. So now for city computation, what we did, we add back 50% of the entertainment expense that we bear under the heading of the customers, owners, partners, suppliers. So this is the definition of add back. And this is the definition of 50% disallowed. Earlier, we already recorded in the accounting. Now we have to add back only the 50%. Any question, please? Let's take the same scenario. This is we took the customers. Here they said no need to check the private element, standalone, same formula. The second is the staff or the employee entertainment. So here we have the 100%. Here we have 100% allowed. Here we have 100% whatever the expense we paid to the staff or employee is deductible. Okay, so we are taking the same calculation instead of here the customers. What we're gonna take here? Employee. So now he said the 100% is allowed. So whatever is did here is correct. Is correct. So we don't have to do any action, no action. Allowed mean whatever you did is acceptable. Whatever we already calculated in books, no need for this. It's continuing the same. So this is the employee entertainment expense for employees allowed. Any question, please? Any question, please? Because so far we covered our next point also.